Hey everyone, welcome back for another edition of Inside the Markets. Today we'll cover off on all the interesting things that happened in September and then touch on some of the things to look forward to in the month of October coming up. The most important macro event within September was the interest rate cuts. So we saw interest rates cut by 25 basis points, and this was really bullish for the TradeFi space originally. So we saw the S&P 500, the NASDAQ and the Dow all hit fresh highs in the early parts of September, off the back of these federal interest rate cut expectations. However, that was relatively short-lived when Jerome Powell mentioned that US stocks are highly valued, which cooled sentiment on some of that optimism. We also saw pretty interesting and surprising data when it came to inflation and jobs data, and very much emphasized the point around a dueling mandate for the Fed. Ultimately, we want to keep interest rates contained, but we also want to make sure that employment stays steady. And interest rate cuts have a differing effect on both. So usually when we get a reduction in interest rates, that leads to further spending in the economy, which can lead to an increase in inflation. But in the same breath, if we lower interest rates, it also allows for businesses to borrow at a cheaper rate. It also means they have more liquidity to expand their headcount, but also keep their headcount on board. So it's a balancing act, and it's one that we must stay across. Ultimately, how the Fed responds to what's happening in the economy will impact risk on assets like the crypto space. We can see though that we are expecting another rate cut in October, so 85%. That ultimately, again, is quite bullish for crypto. It'll lead to further liquidity coming into the space, but it'll be very much a wait and see in terms of how that is impacted by what happens in the economy. Gold's hit its all-time highs while we see the US dollar weaken. So gold is up 46% year to date and is very much seen as a safe haven asset, especially in times of volatility and at times where people feel a level of fear in the market, like it can occur when we get significant liquidations like we've seen. So gold's had its best year since 1979. But we've also seen the US dollar have its worst year since 1973, and it's down about nearly 10%. Bitcoin as well, which is seen as a digital sort of form of gold, has continued to perform really well, and we've seen it up more than 560% since 2023. Unlike previous periods in economic history, we've actually seen the S&P 500 and gold both hit its all-time highs, which is quite rare, but we've seen that in the past, a lot of people that are holding on to fiat are losing that purchasing power. So they're flocking towards hard assets like gold, like Bitcoin. So we had an Altseason false start in a lot of ways. You can see there in the graph that we had a spike in altcoin performance, but ultimately it was short-lived. And part of that was really due to the leverage position overtake in September, where the Fed cut rates, but it led to a liquidation event of over $6 billion worth of longs. We often see this pattern occur in crypto where people look towards a major macro event like federal interest rate cuts, and they look to get ahead of the market by putting on long levered positions. And then when the market doesn't move or doesn't perform as particularly expected, that's where we start to see liquidations occur. This is not necessarily an unhealthy thing in crypto, and we do see it from time to time. Ultimately, what it does is it flushes out speculators in the market and changes that asset ownership mix from speculators to long-term holders. So this is relatively healthy for the crypto space, even if in the short term, it leads to significant volatility. This does highlight the danger, though, of over-positioning trades ahead of macro events, because often what we've found in the past, not so much just with interest rate cuts, but other major events, that the price of assets, it's usually priced in for these events. And so that's something that investors should always be conscious of, that if you're trying to get ahead of the event, you may already be too late in terms of it already being priced in. In terms of what this means long-term, it's an interesting wait and see. Some analysts think that this altcoin breakout won't necessarily occur. If business expansion, though, does continue and we start to see even better job rates and better economic activity, we could see an altcoin season really flow on, potentially even into 2026. We saw in the month of September that Bitcoin escaped what is considered to be red timber, which is historically a poor month of performance for Bitcoin. It actually performed really well throughout the middle of the month. So we hit around 118,000 USD before experiencing the sell-off like all other crypto assets experienced at that time. But it also had an options expiry valued at around $18 billion worth in late September, which also added to the volatility. So when you have such significant sell pressure, even for a really resilient asset like Bitcoin, unfortunately, it's susceptible to the downward pressure of sellers exiting the market. However, we did see it rebound towards the end of the month. So it finished up at around $114,000, which was about a 5% gain from where it dropped down to, which was about $110,000. We've also seen positive Bitcoin price action at the start of October, which we'll touch on, but it's now hovering around $118,000. So that just shows that level of optimism is there, and maybe that crypto-specific sell pressure has potentially lifted. So where are we at in the current cycle? September was certainly an interesting month with a lot happening in the traditional finance space in the macroeconomic world, but we're also seeing a level of uncertainty and a convergence with where that actually resonates with the 4-year crypto cycle. So we have some analysts that worry that the recent sell-offs mean that we're at a cycle top or near one, but history suggests, as you can see by this slide, that we still have room to run. So GMI, or the Global Macro Investor, they have a pretty famous and well-adopted top finder model, which you can see here, that actually points towards an extended upside if we get that expansionary macro environment and the business cycle holds. So some analysts actually argue that historically in the crypto space we've had a 4-year cycle that may actually extend out into 2026 and may ultimately become sort of like a quasi 5-year cycle. Now, historical performance in the past is never an indicator of future performance, so it can certainly point towards a difference in the way in which the crypto space has performed in the past, and that's very much overemphasized as well by the traditional and institutional adoption we're experiencing within the crypto space currently. But ultimately, liquidity is something that we need to be on top of, and that will be the key driver of whether this cycle extends on into 2026. But there's still a level of optimism to have in this space, so we've got legs to run, and no doubt, the historical charts do show that. Ethereum had quite an interesting September as well, and it retreated from its all-time high that it experienced in the previous month. So Ethereum's hit around $4,700 in early September, but as was the case with all risk-on assets, had a pretty poor performance for the rest of the month, given the current crypto liquidations, and resulted in a close around $4,100. One of the key reasons outside of just those mass sell-offs was validator execues. So as you can see from this slide, we saw a really big spike in execues, up from 67,000 to over 206 million. What this does is it adds to the short-term selling pressure as validators seek to unlock their funds and take advantage of the positive price action of Ethereum. However, only 57,600 validators can actually exit the queue a day, which causes really big wait times, and it can actually lead to sell-off pressure as people can see this on-chain data and look to sell off before these execues are redeemed. However, it's not all negative news for Ethereum. We saw corporate treasurers and ETFs now hold over 10% of the Ethereum supply, which is ultimately incredibly bullish for this space. We want institutional adoption with our major assets. We've seen it occur with Bitcoin. We're starting to see that trend follow into what is considered to be the largest altcoin in Ethereum. Long-term adoption does remain strong, even if we still have volatility in the near term. We're ultimately still bullish that Ethereum has legs to run if the macroeconomic factors will allow it to. But ultimately, institutional adoption is a net positive for the long-term vibe of the chain, but also the support of it moving forward. As I mentioned, we've seen significant institutional adoption with now over 10% of the Ethereum supply held by ETFs and corporates. Some of those corporations include Bitmine, it includes SharpLink. Naturally, in the past, this has been exclusive to Bitcoin, but we're starting to see true, genuine adoption of Ethereum for a range of treasury funds, and they have a level of interest in actually storing Ethereum on their balance sheets, which is a very positive long-term impact for the Ethereum ecosystem. Nearly 70 corporations added over 5.3 million, which is about $21 billion worth of Ethereum. And we saw that ETFs accumulated around 6.8 million ETH, which is around 28 billion over the same period. So it's a growing trend in the Ethereum ecosystem, and it's great to see the TradeFi interest continue to grow. The final point around Ethereum is that, yes, it had a pretty poor month relative to other assets. So the price of Ethereum reduced by about 5.6%. And so whilst this was considered to be a bearish month, in our view, the possibility of an altcoin season where Ethereum leads the way is still very much on the cards. It wasn't too long ago, back in August, that it hit its all-time high of $4,955. And if this level can become support, it's still in play that we get further all-time highs in further months, especially in a month such as October, where historically it's been a really strong performing month for altcoins like Ethereum. So it's certainly a watch this space on ETH. Yes, it's had a volatile month, but I still think it has legs to run in the coming months. There are a range of factors that will impact a risk-on asset like the crypto asset class, and certainly political factors will impact it as well. An interesting recent development towards the end of September was the US government shutting down. So it officially shut down at the end of September due to Republicans and Democrats being unable to come to an agreement on extending funding for federal departments. Now, shutdowns like this, they're not super common, but when they do occur, they do create short-term volatility as the markets digest political uncertainty. However, for crypto, it hasn't really impacted the space too much. In fact, towards the start of October, Bitcoin is around $118,000. So it's actually been a positive impact for the crypto space, not necessarily a negative one. But ultimately, in times of political but also geopolitical uncertainty, risk-on assets are the first to lose their value as people flock towards safe haven assets like Bitcoin and like gold. But ultimately, this hasn't had an impact yet on the crypto space. In the past, we've seen temporary market pullbacks, but little of these pullbacks are a long-term effect. And we'll keep you updated in our weekly roll-ups in terms of how this eventuates moving forward, but it's certainly a political impact towards the space to be across. So we've got a few interesting events and catalysts to look forward to in the month of October. The biggest one being the FOMC rate decision on October 29th. So it's looking likely that we'll get another rate cut. This will be quite a bullish event for the crypto space. Again, it'll be interesting to see whether people place levered positions, especially given what happened in September. But ultimately, another rate cut will be quite positive as it'll lead to increased liquidity. We'll also see investors look for a better yield or a better return elsewhere, and we'll probably look towards risk-on assets like crypto to try and generate that yield. The other important catalyst is the US-China trade deal deadline that is due to occur on November 10th. Trade negotiations are interesting. We do expect volatility in risk assets around these trade announcements. So again, it's something for our clients to be across, and please make sure you engage with your broker to understand how these tariffs may affect your personal crypto position. So final thoughts for the month of September and what to look forward to for October. Bitcoin cycle may extend, but it's very much pursuant on what happens in the macroeconomic world. As we speak, it's climbed above 118K to start the month of October. So we're still relatively optimistic that we'll have a really strong perform in October and Bitcoin will lead the way. Ethereum's institutional adoption shows that it has staying power, even if we start to see some sell pressure from the network side. Like Bitcoin, it's actually performed really well to start October. So it has that positive price momentum that we hope will flow in for the rest of October. Altcoins remain in a wait and see mode until we see what actually happens with liquidity. Look for Ethereum to break its all-time high. If that does occur and we start to see Bitcoin dominance dwindle, that will certainly be a catalyst for altcoin overperformance moving forward. And just like most things, the Fed's actions will continue to set the tone for risk on assets. So we'll very much be looking forward to what happens this month when it comes to interest rate cuts. But stay disciplined, make sure you stay in touch with your broker and stay in touch with all of the research that we provide for our clients. Thanks for listening. I hope you got something out of this and I look forward to seeing you next month on Inside the Markets.